It's exclusive, University of Florida Assistant Finance Professor Alejandro Lopez-Lira. It's great to see you, sir. And this is something that you and your team have been working on and, I guess, studying for years. But what is so interesting is that the Chat GPT in particular seemed to do the best compared to, say, Grok or DeepSeek. Talk about how this all played out for you and your team.
Yeah, hi, thank you for having me. Great pleasure to be here. We've been researching this for a while. It all started a couple of years ago when ChatGPT came out, and we just wrote an academic paper about how, in principle, in theory, you could use it to forecast stock price market movements using news headlines. So we would give it a headline, ask if the stock price is going to go up or down, and then track the returns, right? But that's kind of like in theory, in paper. It just takes a little bit of time to develop an actual application. So we worked together with Autopilot, and then they just decided, you know what, we're going to put $50,000 at the beginning, and we're going to see if it works. And if it works, great. And if not, it's a wonderful academic experiment. And then suddenly it gathered so much interest that I think there's something like 40 million assets under management now on the portfolio, just tracking the returns by the GPT suggested trades.
Yeah, I'm looking at Autopilot. The last number I'm seeing, and this might be a couple of months old, 37.9 million in AUM. So per the project's white paper, so there's 15 assets in it, right? 10 stocks and then 5 sector-specific ETFs. What's interesting is that if you look at this data, and I want to ask you about this, on March 11th, it was rebalanced, right? ChatGPT went to safe haven. And so it's looking at headlines, it's looking at market moves, it's looking at pricing, it analyzes all of this data, right? And then it rebalances. It went for things like Berkshire Hathaway, Johnson & Johnson, and the consumer staples sector spider. So talk to me about how GPT looks across the world, how AI actually takes all of this data to recommend that I should be buying Berkshire Hathaway right now.
Yeah, absolutely. So it basically takes a look at most data as possible. So it knows, the macroeconomic environment, what's happening up with wars, with tariffs, with politics, etc. And then ever since like February, March, it became a little bit risk averse because it was like saying, all the market movements and all the policy changes that were going on. So ever since then, it just started to go a little bit more conservative. So it's been, on long-term treasuries for a while. It basically receives information of both macro variables and also all of the firm news information, their balance sheet items, their recent price movements, etc. So it just, the whole internet just goes through it, and then it outputs a portfolio of 15 assets.
And just to be clear, it rebalances once a month, right?
Yes, rebalancing once a month. And just to be precise, there's no longer the strict rules about like 10 stocks and 5 ETFs. Now the portfolio can just say like, you know what, this month we're all going to be in cash because I don't know what's going on, or I just want to go like super bullish on like Amazon or whatever.
Well, AI moves fast, per my older point there, right? But it's so interesting because if you look at the difference between ChatGPT and then Grok and DeepSeek, I was looking at the numbers. So DeepSeek's only up 3.9%. The Grok version's 3.55%. So why is the ChatGPT portfolio much better in performance?
Yeah, just to clarify, the Grok portfolio and the DeepSeek portfolio have only been started recently. So that's the performance since inception. So there's a little bit of a mechanical edge in there that ChatGPT just has been way longer. But honestly, it's still too early to say who's going to win the AI wars. There's a lot of people in the camp of like ChatGPT, a lot of people on the camp of like Grok, and some on the camp of DeepSeek. That's what, the 3 experiments are running out there. I do think in general, and this comes from academic research, the smartest models in all tasks are also the smartest models in financial tasks. So at this moment, it's my personal opinion that O3 is just the best model out there so far. So it's natural that it would perform better. But, the minute like Grok comes out with something better, the performance may shift, right? Like this is a very dynamic field.
Okay, so final question. So should stockbrokers and financial analysts and managers be nervous? Is this going to take away human jobs?
There's some parts of the job that it's going to take away, hopefully the boring ones, right? Like, but there are some parts that you cannot take away, right? Like the human to human interaction is impossible to replace by definition. So it's certainly going to shape the tasks.
Well, if I'm getting less than 11%, then I might get a little nervous. I don't know. I might need one. You can't pick up the phone and call AI. Alejandro Lopez-Lira, thank you so much.